is ever since rates peaked in the 80s, every single economic cycle, every single economic downturn has begun with the Fed funds level ever lower. It always breaks the economy at a lower level. So the one that broke the economy back in 2018 was about 2.5%. The Fed is likely to start raising rates and follow through on that. These negative real yields that we're dealing with, these are the most negative real yields in the history of the record book. Very, very negative real yields. I mean, real yields, basically the Fed funds rate is negative 6.8 right now because Fed funds is at 0 and the CPI is 6.8 and the like. So one thing that we did notice in 2018 is the Fed they stopped QE, they started quantitative tightening, letting the bonds roll off, and then they started raising interest rates, and we got an instantaneous bear market. That was which felt like a very historically compressed bear market, but when you compare it to 2020, it was actually a little bit more extended. But it fell. Certain indices fell 35% in weeks back in 2018 because it's the double-barreled tightening that led to the economic stresses, and the Fed was really quick to reverse. And I think the Fed is going to reverse again, and this might be the last time. We might be getting really finally to the end game of this, where when you have to start reversing at such low rates, and your responses are so powerful in terms of deficit spending,